The ECB is set to cut rates later as money keeps moving out of US assets and into Europe. It's Thursday, 5th of June, and here's what you need to know. The European Central Bank is almost certain to cut interest rates later for the 8th time in just over a year. The bank has won its war on inflation. That's now below target in the Eurozone, and it's trying to work out how to handle President Trump's trade war on the EU. That means it may be more cautious going forward. Many investors are now betting the ECB hits pause on further rate cuts over the summer. It's expected to cut forecasts for growth and inflation and say that President Trump's tariffs will have a lasting impact on the European economy, even if the two sides strike a deal, because of the hit to business investment and confidence. Chief EU negotiator Maroš Šefčovič said he had a positive meeting with his US counterpart in Paris on Wednesday. He says he's optimistic about progress, but he deeply regretted the doubling of US tariffs on steel this week. Our chart of the day is the euro against the dollar. That just keeps on rising, with the dollar around a 3-year low. Institutional investors are seeking to move money out of the US, especially as President Trump's big, beautiful bill makes its way through Congress and is estimated to add $2.4 trillion to the US national debt. European assets are a key beneficiary, although the rise of the euro could eventually drag on Europe's exporters. Our number of the day is $449.99. That's the US price of a Nintendo Switch 2 on sale today, but you can't buy one unless you've pre-ordered because they've totally sold out. In Japan, 2.2 million people joined a waiting list for pre-orders, and at Target they sold out in 2 hours. Nintendo expects to sell 15 million units this financial year, and that stock is up almost 30% so far in 2025. But whether it can stay at those levels will depend on if the company can satisfy demand in the era of the trade war. Most of those devices are made in China and 44% of demand is in the US. Nintendo had to delay pre-orders while it worked out how to cope with tariffs. And our stock of the day, reporting later, is Lululemon. That's down more than 12% this year as its supply chain was hit by tariff threats, and customers are increasingly put off by the price of its leggings and yoga pants. Watch out for any comments on weakening consumer demand. And that's what you need to know this morning.